What's up, everyone? I hope you all had an amazing weekend, and I hope you guys are ready to roll because it is now go time. We have a giant week ahead of us in the markets. Friday was pretty bloody, and volatility is increasing as we speak. And on top of that, we're just set for a big week in the markets as we have a crucial interest rate decision scheduled for this week. Tom will not be with us today, but he will be back with us tomorrow. But with that being said, let's jump right into it. And first things first is the giant earnings calendar for the week. I'm just kidding. No stocks are really reporting earnings this week. It's kind of slow on this side of things. Really, we only have FedEx on Wednesday after close, and I'm going to be honest with you, that's about it for this week on the earnings side of things. It's a little bit boring, but it's all right. Now into the fun stuff. So basically, the main thing for this week is the federal interest rate decision, which is going to be on Wednesday at 2 p.m. Eastern time. Same time as always. And basically, every single time we have an event like this, the market is, poised to move quite a bit. In the past, Jerome Powell and the Federal Reserve have been increasing interest rates a lot because inflation has just been, out of control. But we're now to a point where, believe it or not, finally, it looks like the Federal Reserve is actually expected to keep interest rates exactly the same. So heading into this week, there's actually a 98% chance that they just keep interest rates exactly the same and they do not raise them at all, right? That's pretty good probability. And what's even more interesting is if we, view out a little bit further, we can see that interest rates are expected to be kept exactly the same all the way till May of 2024. This is the first time we've seen, a projected pause for this long in a very, very, very long time because, basically all year long and all throughout 2022, the Federal Reserve just kept pumping interest rates higher and higher and higher and higher and higher. And now they're finally like, all right, guys, we got to chill out now. Let's see how the economy reacts. If we really blasted the economy, we might have to cut interest rates sooner than expected. But, hopefully we didn't destroy it too bad, right? They're just aiming for that soft landing. So, basically the Feds are just expected to keep interest rates exactly the same for a while now, and we're going to see if they stick to their, current pricing. But what's also very interesting is what we can see on the chart right now is basically the federal funds rate, which, goes hand in hand with the Fed's interest rate increases and decreases. What we can see all the time going all the way back to 1955 is that the Feds will go in periods where it's they just pump interest rates super hard and for months or years at a time. But there's always some point where, of course, it peaks, but even more, even more pronounced, there are times when it's just flat, right? It's just the pausing cycle where interest rates are just held exactly where they are, and that's exactly what we have priced in right now. Again, this is the first time, basically, since 2018 that we have this to be projected like this. So the main thing to know is that this week will be very important. More specifically, Wednesday, 2 p.m. Eastern time. These events always move the markets in giant ways. There's always a bunch of opportunity behind these events. I found the best way to trade them is after the event. So Wednesday, maybe at 2:30 to 3 p.m. Eastern time is where you can really ride that momentum and, trade the news as it comes out. But that's the main thing for this week. Keep a very close eye on that. But while I'm not trying to fearmonger or anything like that, there is something very important that I just have to talk about right now in the market. What you'll notice on Friday is the SPY took a decent hit, got slapped up a little bit, we'll say. Now, even scarier, we can say, is we all know that not all stocks are created equally in the market. For example, a big powerhouse tech stock like Nvidia or Apple is a lot more powerful and influential than a company like Campbell's Soup, we'll say, right? Pretty obvious. But the main thing to take away from this is when these, big powerhouse stocks move, they kind of tell the rest of the market what they're also going to do. They call the shots, we'll say. Looking at some of these big powerhouse tech stocks, whether it be Nvidia, whether it be Apple or Microsoft, or Tesla, or Netflix. A lot of them, at least over the past, couple days, the past 2 weeks, have been selling off in a decent way, and whenever they do this, they directly drag the rest of the market with them. Let's look at Netflix, for example. They had a pretty rough week. Over like the past, we'll say since September, they are down around 13% just over like the past couple weeks. And that's just Netflix. Let's say we go to someone like Nvidia. They topped out so far around like $500. And since that point, they're all the way down to $439. It might not feel like it, but that's actually another 13% drop. And it's like when you add up these 13% drops on some of the biggest, most powerful stocks in the market, it definitely brings a whole new wave of bearish selling pressure. What's also worth noting is that SPY has been making lower highs over the past couple weeks, which is just another bearish sign. So heading into the market this week, really be willing to adapt, and it looks like bears are getting more and more control as of lately. Some of the best ways to capitalize off of a market that falls are stocks like SQQQ. This rises a lot when the market falls. You have SPXS, you have UVXY, you have VXX. All these pop up when the market's falling. Just be willing to adapt this week, especially given the events we have scheduled for the week. But like I said, not trying to fearmonger, just be ready to adapt. But with that being said, let's get right into the fun stuff. We're not holding back this video, which are the setups for tomorrow. One stock I'm watching very closely is actually UVXY. It had around a 6% update on Friday. It's at all-time lows right now, and this is just like an ETF that's used to profit when there's fear or a lot of selling pressure into the market. We can see through all other periods of, we'll say, market fear, this thing can really pop up. For example, in the last time the market kind of freaked out, which was in March of 2023, UVXY did pop by around 67% in just a couple days. And of course, when you look through periods of like extreme fear, like, of course, like the whole COVID scare, of course, that was just a historic run up by like 1,200%. But, the main thing to take away is when fear happens, UVXY pops up quite a bit. I'm not expecting a 10x out of this or anything like that, but I would not be surprised if this one did pop up a bit. So I am watching it to the upside. The main thing for this to pop up if the interest rate decision or Jerome Powell is a little bit more bearish or hawkish than expected. Another stock I'm watching pretty closely is AMD, a stock we all know and love. So this stock has actually been relatively weak lately, and when we look at AMD, it actually topped out in around the middle of June, right around $132, and ever since that point, it has just been like drifting lower and lower and lower, right? While we look at one of its biggest competitors, Nvidia, that actually topped out much more recently, which is basically the very end of August, right? So Nvidia has been a lot more stronger, relatively speaking, to AMD, but both of these stocks are starting to pull back a little bit. So looking at AMD, it's really starting to sell off. It was down 5% on Friday. It was pretty rough. And looking right now, it definitely has a lot more room to fall in the short term. But the main thing will be is if the market also falls with it, which again, that'll be tied pretty strongly to the interest rate decision this week. So looking at AMD, I am going to be pretty bearish on this one for this week. I would love to see a retest of that $100 support level. And if it breaks below that, I think it can fall a lot more. But I will say this $100 support is pretty strong, so definitely keep that in mind. But what I really want to emphasize going into this week is be willing to adapt. If you just go into the market this week saying, I'm only bearish, or if you say I'm only bullish, I think you might be in for a rough ride. The people and traders who have been doing the best lately are those who've been willing to adapt. We could see while 2023 has been a great year so far, it has not just gone straight up. There have been periods where the market's down for a couple weeks or months at a time, and when we do see those sell-offs, they are pretty strong and like violent, and they're tough, right? They're not just like little 2% drawdowns. So just be willing to adapt this week, whether the market's bullish or bearish. Those who can adapt will survive and prosper. With that being said, let's jump right into the momentum plays for tomorrow. With the first one, we have Meta to the downside. This one had a pretty rough day on Friday. If it sees a strong break below $300, I will be watching this one for puts. With the next one, we have Microsoft, also to the downside. And if this one breaks below that 329 support, I will also be watching this one for puts. And then with the last one, we have Amazon for both directions, and basically if it breaks above the 141.35 level, I will be watching it for calls, and if it breaks below the 139.50 level, I will be watching it for puts. So this one is both directions, but it's now about that time for the big money trade of the day. Today we are looking at a $650,000 trade on Blackstone, ticker symbol BX. Basically, this stock, has been doing pretty well over the past couple weeks and months, but when you zoom out, it is, still a good amount off of its all-time high. And basically, on Friday, someone dumped around $650,000 betting against this stock that would, obviously profit if the stock fell. Basically, they bought put options on it, and the more it falls, the more they'll make. But more specifically, they bought the 110 strike put options, and they shorted the 100 strike put options, both of which expire on October 20th of 2023. This trade is a put debit spread that'll actually, have a maximum profit if BX is at or below $100 on October 20th of 2023. So overall, I think it's a pretty decent setup. I'm not going to jump in on it just of 2023. Overall, I think it's a decent setup, and I am going to be watching this one pretty closely to the downside over the coming days and weeks. Whenever you have a hedge fund dump $650,000 into a trade like this, it's not by random chance, and especially with the market starting to fall off the way it is, it's definitely worth keeping a close eye on. But with everything being said, if you guys are really looking to capitalize off of the recent market movement, you gotta check out that first link in the description in the comments down below. Our bots have been on fire. We've had a bunch of people just posting those profits all over. We could see Simp, for example, saying the stat modeling program and Mike's tools have changed my life. Day 7 of profits. This week, he's up 463%. That's absolutely insane. And Simp's also a member of the day, so huge shout out to you, Simp. Absolutely amazing work, but we could see all in all, it's been a very great week, and just, it's been awesome lately. So if you guys want to capitalize off this action, you definitely have to check out that first link in the description in the comments down below. It's been awesome. We could see Simp also posted a time where he turned $500 into 15 grand in under 30 days. Of course, not every time will be like this. It's just been especially hot lately because the opportunities have been so great. We could see one of last week's best plays was a Netflix put play that went from $380 all the way up to $1,950. This was one of the best plays of the year. Like I said, not every single play will win. If you just join the program and expect to turn $2 into $5,000, that's not what we're all about, but we do have some of the best software in the entire industry. Our bots crush it. Not only do you get access to our bot day trades, but you also get access to our multi-million-dollar hedge fund trades that we follow, swing plays, and a bunch of other custom tools you just won't find anywhere else. It has been absolutely amazing lately, and it's definitely worth trying out if you're into short-term trading. It is hands down the best program out there, and in the worst-case scenario, you can cancel at any time. But again, it'll be that first link in the description and the comments down below. But with everything being said, guys, opportunities here. The market's starting to heat up a little bit. Volatility is increasing, and we have a big week ahead of us. These interest rate decisions are very crucial. They've been known to move the markets quite a bit, especially over the past couple years. So I hope you guys are ready. It should be a very exciting week. And if you guys had a great week last week, awesome job. Let's keep that momentum rolling. But if last week was a little bit slow for you, that's all right. This week should be a little bit more exciting to trade, especially given the events we have at hand. Besides that, guys, thank you so much for watching. Let's have an amazing week. And again, if you guys want to try out the stat modeling program, it'll be that first link in the description and the comments down below. And besides that, let's have an amazing week, guys. Thanks for watching.